So the pre-markets are crashing, everything's falling. It does look like it's going to be a bloodbath today. We haven't seen a jump in the volatility index like this since 2020. And I had to zoom out to the monthly charts because I couldn't show the 2020 issue on the daily. Apple has dropped 15 points even before the market opened. Tesla fell by nearly 20 points in the same time. And in that time frame, JP Morgan has also fallen 9 points. And remember, the markets have not even opened yet. And for those of you who are holding crypto, you have not seen the market cap drop like this since February this year. In fact, the market cap has shrunk by $500 billion since the beginning of August. And the stories on the street as to why this is happening is because of the Japanese yen. It's risen over 10% against the strong dollar for the past few weeks. And I've posted about this earlier. You should take a look at these two posts. And this is a result of the Bank of Japan raising their interest rates. Japan's interest rates have been 0 or even below for quite some time, which means it was very easy and cheap to borrow money. And big investors did a couple creative things with this free money. Some big investors would just get this very cheap loan from Japan and then invest it wherever else they wanted all around the world. Other big investors would buy Japanese bonds and then take a very large loan out against those bonds. And with that loan, then they would buy a bunch of stocks or other equities or other risk-on assets all over the world. But because the Japanese economy is crashing, the money that was leveraged against that debt is in a lot of trouble. So of course, margin calls are happening and liquidations are taking their course across the board. Of course, there are huge sell-offs in the European and American markets to cover whatever losses. If that's not the most pressing reason, it's at least one of the most pressing reasons. But something even crazier is happening right now. The yield between the 10-year and the 2-year is over 1 penny apart. That's it. And about 15 minutes ago, they were 1/100th of a penny apart. The blue is the 10-year yield and the orange is the 2-year. A lot of finance bros are scared of this because once the yield curve uninverts, then a recession shortly follows. So they believe. But there have been exceptions to this, like in 1966 and 1998. So yes, things look very nasty right now, but I'm keeping my eye on the 10-year yield because I'm curious to see if all of the scared money in Japan and all over the world is going to start flocking to the 10-year treasury bond. And if they do, you will see this yield start to go down even further. If that happens, we will start to see mortgage and other types of interest rates start to come down. My name is the Geo Husar, and let's see how this plays out.